Hey Silver Bull fans, welcome back to Silver Bull channel. Just looking at what's happening in silver lately, it went down to, well, not as low as 26, but in the $26 range. And it really has been building over the course of the last week. We got up to 28, and we just see this huge smackdown here. And we see this time and time again. And someone does a big takedown, which, straight away people say, oh, the market manipulation is occurring. I'm not sure, but the fact of the matter is, in this current market, anytime we see any build-up in the momentum of silver, we see this smackdown occurring, and it's normally, it's not just normally a slow down, it's a big smackdown, a big takedown. If we look at what's happening in gold, if it comes up, these charts are courtesy of Kitco, of course, and many thanks for them sharing their charts. We can see there was a spike down on the bid price there. So there is some degree of balance between the gold and silver market. They're not always in lockstep, but normally what happens to one happens to the other. So here we go. You can see that drop down to 1590. It is for gold, and then a bounce back up. But we don't see quite the same bounce back up in silver. If we go to the original silver chart, you'll see we just get the knockdown. We don't get the bounce back up that gold had. And so silver's trading around $27.40. The Australian dollar is still high at the moment, $1.04 US. Looking towards going to $1.05 US until the ex-Reserve Bank guy said that he believed our Reserve Bank should intervene in the currency markets, and that sort of has put a bit of downward pressure on the Aussie dollar, or stopped it just going up and up and up. And the reason, as I've explained before in other videos, why the Aussie dollar is important is because the Aussie dollar is worth more. We're actually buying our silver in US dollars. So an increase in the Aussie dollar means effectively, if the silver price was to stay the same, as Australians, we'd be paying less for silver. Of course, what happens though, you'll find as the resources go up in value, like gold and silver, the Aussie dollar tends to track higher as well, because it's viewed as a commodity-backed currency. In euros, the Australian dollar's worth 85 euros, 67p, $1.05 Canadian, and it's one of the stronger currencies around the world at the moment, which isn't great for our manufacturing industry. There's a lot of underlying fear in the Australian economy at the moment. People are very cautious. I'm not going to say they're panicking. They're not dumping stocks right, left and centre or whatever. They're just very cautious. People are perhaps thinking twice about where they invest their money, if they have any money spare to invest, that is. You get a very low rate of return in banks, anywhere from 3 to 5%. If you want 5% or above, you've got to sort of lock up your money for a while, which a lot of people don't want to do. The other option's the stock market, but with resources looking like cooling off as the Chinese economy cools off, then some of these stocks in Australia will go down as well. The BHPs, Rio Tintos, really big multinational companies that happen to partly reside in Australia. It's interesting the Chinese too are looking for other sources of resources, like Australia and Brazil may be able to supply them all they need, but the Chinese are very cunning businessmen, and they're like wanting to buy a company, an Australian company at the moment that has quite a large iron mine in the Congo region, for example. So I suppose it's a smart buyer play from the Chinese because they want to spread around their source of resources, and that way they can compete one against the other and try to get a lower price. And it also just helps with supply issues. If there's a big flood in Australia that's blocking the mines or something, then they can up their African exports, and same vice versa. If Africa has a big flood or something else that causes problems in the mines. It's interesting, we're seeing a lot of resources go down, like iron and coal, and that backing off. But gold hasn't really backed off, and neither is silver. There seems to be this underlying strength to gold and silver, and that's probably the caution in the market. And gold and silver is still being seen as a safety play at this time. More so gold, of course, but for the average pleb like you and me, we stack what we can, and silver is the way we go. Unless you want a magnifying glass to have a look at your gold holding. That's what's happening with the silver market. Yet again, another smack and down. Wasn't surprised, to be honest. I was looking at it climbing. I was interested to see if it was going to test the $30 barrier. In which case we'd be in a whole new game. But it's got that smack down, and obviously they're watching it, and I don't think they're going to let it get to $30. They seem to be happy to have it around this mid-range of, $26 to $28 an ounce, which seems to be the fair market price at this time. I'm still stacking. I buy when I can. As you saw in my recent videos, I bought 5 ounces. I mean, it's not a lot, but we've got other saving goals as well, buying our own house and things like that, and you sit back and think, do I really want to enter the property market when it has the potential for a crash? But at the end of the day, you can't settle forever. So just closely watching things, and it doesn't hurt to save and just see how things are going. But a savings account, your rate of return is so poor, you're basically lucky if you're keeping pace with inflation, and then even then the government wants their share of your interest, so it's just ridiculous. I get a bit frustrated with government after a while. Its bureaucratic nature, its lack of innovation, and we have new taxes all the time. That seems to be their only answer. Let's have new taxes. In Queensland here, the Newman government's causing a lot of woes because it's sacking a lot of people, which is sad. No one likes seeing their job lost, but the fact of the matter is Queensland's in so much debt they have to make cuts somewhere. It's far better they do cuts like this now than leave it 5-10 years down the track and have to cut 50% of the workforce, and we end up with unemployment like Spain of 25%. It's better, I know it's harsh, but it's better to cut 1% now and sort the thing out than leave it 10 years and have to cut 50%. So I feel for those people who've lost their jobs. There are other jobs out there. At least some of them are jobs that we don't like doing, there's cleaning jobs and things like that. And when you're being an office worker or whatever, you don't suddenly want to be pushing a vacuum cleaner around or washing down stuff with a rag, but a job's a job. And whatever job you have, you should try to do it to your best. And we've all done that. I've pushed towels around a hotel. You know, done that. What is a pretty basic job of taking soaps, toiletries, little towels, and all that. If you wonder who does that at a hotel, yeah, there's people in the back whose job is solely to stock. My job wasn't even to put it in the rooms; that was for the cleaners. My job was to make sure the cleaners had all their supplies. So I'd go up all the 20 floors and drop off loads at each floor. You know, drop off a certain number of towels and soaps, and that was my job. And then you come back down and fold some towels and whatever other odd jobs they had for you going. Not great employment, not great hours, but it was a job. And, you know, we all start somewhere, whether it's working at McDonald's or washing cars or whatever. So sometimes you just have to eat a bit of humble pie and do what you have to do to earn that buck. But like most people, I dream to be financially independent and dream to be no longer a wage slave. And for those others of you out there who are dreaming of not being a wage slave, you have my sympathy and you have my best wishes in all your endeavours. That's Silver Bull Channel signing out.